Okay, so here's kind of going back through the analysis. If we can kind of factor that these tops were the resistance level, where it hit it once, hit it twice, hit it three times, and then we know what a J-hook pattern setup tells us. Pretty much tells us when they couldn't close below the T-line, if this was wave one, wave three, the same magnitude, told us they were going to break out through this area, and not only this area, but through this area also. So just puts us in a position of knowing that things are going in the bullish direction. The NASDAQ had a different trend channel that was being breached, kind of right down through this area. Then it did the doji sandwich breakout. Now today, it just closed above the, you can probably start way over here. It closed right there. And the weak sister, though, right now is the, whoops. The transportation index, another one that you could draw a trend channel right down through the tops, and we're not quite there yet. But we did breach the 50-day moving average. Stochastic's not quite in the overbought area. So all this kind of implies that we're still heading higher. Some of the other things like crude oil, just getting to the oversold area, and where did it do it? When it got back here to the 200-day moving average. So start watching crude oil, which will kind of be reflective of what's going to happen in some of the crude oil, or the oil stocks. Gold continues to lollygag here, but it's still above the T-line. So as long as it continues above the T-line, it should be in an uptrend, which means things like Nugget are still going to act pretty strong, as well as JNUG. Nice steady uptrend. The dollar setting up for this bobble. Failure at the 200, back to the T-line Morningstar signal. Be a buyer of the dollar if you're trading the futures, if it comes back up through the 200 over the next day or so. And what else? The grains. You can see that soybeans, ever since the Bearish-Harami gap down, have not been able to get back up above the T-line / 50-day moving average. You want to stay short on this. Same scenario on wheat. Wheat couldn't get back up above the T-line, making for possible J-hook pattern to the downside. People were pointing out in the futures room, short the hogs. Same scenario. Notice what happened right in here. Wave one, wave two, and what was the confirming indicator? They couldn't close above the T-line. Wave three in progress. I've been short the cattle. Cattle was down the limit today, and it kind of breached this level. So another one. We have wave one, wave two. Notice where wave two failed? Right smack dab at the 50 with a shooting star, bearish engulfing, bearish engulfing. And so these are what we call a scary day. And this is why you always want to wait to see how they close at the end of the day. You were short cattle, stochastic still heading down, and it came right back up, and it gives you ulcers. But you just have to have the wherewithal to say, all right, I'm going to see what it does by the end of the day, and notice where it closed, back below the T-line. So those are what we call the scary days, because it's in a downtrend, and then all of a sudden they're popping up positive. You just have to sit through it. Okay, what else do we got? All right, lots of good-looking stocks. The techs all moved back pretty strong during the pullback. You can see the double bottom on Cuervo right off the 50-day moving average. And then they've gapped it up, heading toward the resistance level. Still could be a lot more upside on this one, like a wave 3 of this magnitude, which would be 10 points, taking up probably above the $60 range, 64, 65. These are all stocks that we're holding. You can see the big fry pan bottom on EXK, and you can see where it broke out, right in here. And how did they break it out? They gapped it up through that level. So remember our analysis of the patterns. Again, we're looking for the buy signal in the oversold area. We're usually seeing the breakout of a pattern when stochastics are in the overbought area. So what do we want to do with this one? Very simple. We just stay long until we see a sell signal. The further it moves away from the T line and we see a sell signal, the higher the probability it's going to come back and test it. So definitely keep an eye on this to see what the range is away from the T line. Weibo, another fry pan bottom, broke it out. Look for at least a 45-degree up here. Just stay long. MLNX, another one that we recommended not too long ago. You had the big bullish engulfing, then a gap up, then another gap up through this downtrending channel, which makes it very easy to see a wave 1, wave 2, going into wave 3. And these are all kind of charts that once you understand what the waves are telling you or what the signals are telling you, you can pretty well analyze, especially with the signals. On a pullback, when it's indecisive, pretty much telling you it's not going to pull back very far, that your uptrend is probably still in progress. Ooh, and here's the one that we're making lots of money on, especially from the Skyrim. Look at the big fry pan bottom on this one. Then notice what it did over here. Your slow curve breakout. There's your J-hook pattern. And what's our one criteria that it hasn't been able to do? Hasn't been able to close below the T line. So now, when you have a fry pan bottom, what do you expect? A big price move. The other side of the coin is, when is it time to start looking to take profits? The further away you start moving from the T line. So this one, if it's moved up strong tomorrow, up here with the T line back here someplace, that's where you start flipping to your 10-minute chart and saying, all right, let's start looking to take some of this off the table. CLF, kind of a wave 2, J-hook. Another one where you stay long. You're up in the overbought area. You're starting to gap up. Put your stop someplace where it's not going to affect you unless there's something drastic that's going to happen. So I'd put a sell stop right here at today's open, because this should be in wave 3, going a little bit higher. It shouldn't be coming back through today's open. And FSM has worked out nicely. Again, the same visual analysis that it puts us in the right place at the right time. Notice when this moves sideways, where it moves sideways to. A couple of times. Back to the 50, up. Back to the 50, up. Now what did it do at the resistance level? Which you can see kind of an obvious resistance level right in here. You can go up a little bit higher. Doji sandwich breakout. How long do you hold on to this one? Well, if it keeps moving away from the T-line, flip to your 10-minute chart and get a little bit more refinement as far as when the selling starts. IRM, nice little J-hook pattern, so you stay long with this one. PBYI, you can see the pattern setup. So where is your logical target? You know, if you can pretty much draw a, let's do this. You can see this going on. Where's your next logical target? Back up to the top of the trend channel. And why do we think it has a possibility of getting there? Warning star signal. Bullish engulfing, close above the T-line. Bullish engulfing signal. Close above the T-line in the 50. This tells you you're in an uptrend. And there's a trend channel that everybody else is watching. Let's see. KRA. Where is it sitting right now? Right here, ready to break out. What's your next target? Probably the trend. Okay, Bob, it doesn't have to be that sophisticated. It's just kind of visual. Where did this wave start? Right about here. Where did it end? When you can see it start flattening out. So it doesn't have to be real specific. Basically a wave 1, wave 2. Now look for wave 3 to be the equivalent to wave 1. And I'll try to point some out as we... That was KRA. This is wave 1, wave 2. Now you're in wave 3 on K2. And notice the T-line crunch. Somebody was asking about the T-line crunch today. T-line crunch is when you're in an uptrend, and you can see 1, 2, 3, 4 times. It came back and used the T-line as a support level. IRM has a big drop after hours, back to 39. Did they report earnings? Take a gander. Yep. Oh, big drop back to 39.93. It closed at 40.31. That's not doesn't look like a huge drop, but it looks like 40 cents. If you didn't get in today, remember, a lot of people say, was it too late to get into a position? No, this was kind of the confirmation. This was our confirmation. Your best friend, Doji, gap up, then he gapped up again. It would have been better to get in here. But what do we expect? What's our upside potential? Well, if this is moved from the 17, say 50 area to the 2750 area, 10 points, that means we're probably looking pretty much for it to go to the 3750 area. So that's the best place to start adding. It hasn't moved a huge percentage. The best friend, Stephen, is a doji followed by a gap up, like we saw in Amazon when it came back and hit the 50-day moving average. We call it your best friend because not only is it going to tell you you're in an uptrend, but it will also tell you you're probably in a very strong uptrend. And additionally, the probabilities, or not the probabilities, but the frequency is quite often. So the best friend signal occurs quite often, gives you a high probability of being in the right direction at the right time, and a high probability that you're going to be moving in a pretty strong uptrend. And that's, again, we've got a video on the signals and patterns quantified, because a lot of people will ask, which ones are the best signals? The signals are all reasonably good. That's why we've narrowed the 50 or 60 signals from the Japanese universe down to 12. Those are all good signals. The kicker signal is your strongest one. The rest of them all work well depending on what the market conditions are. Then there are some, like a left-right combo or the best friend or a fry pan bottom breakout, that we kind of look at to see what the probabilities of those setups are compared to just a signal by itself. All right, you've got Smith & Wesson with a gap in the overbought condition. And where is it right now? Right about the same place it topped out before. So if I was long, and again, there's kind of your best friend. This is what we call your message, though. Instead of opening and then going positive, it opened and traded off, which was your profit taking. That's the message. And the message is, even though they were selling off when it initially gapped up, the message was they gapped it up. So what do we wait for? We wait for the profit taking to be over. Then you can start buying because of this message right here. Also, notice what else was in this uptrend. The belt hold signal. What's the belt hold signal kind of imply? Not imply. It pretty much tells us they've taken some sellers out of the way, and the bulls are still there, which means there's less sellers now in front. It'll continue that uptrend. AMBA we recommended a couple of days ago because it was getting out toward this breakout level. So kind of a little double bottom, and this is pretty much your classic, which is the fry pan bottom. And what do we expect out of a fry pan bottom? Strong price move. After a strong price move, what do we look for? Kind of a pullback, and if it's indecisive, what do we look for next? The J-hook pattern. So that's why we call it the classic, because the prerequisite for a J-hook pattern is a strong price move, which is the result of a fry pan bottom. I'd still be buying this one on positive trading tomorrow. This one is kind of needs to do something. This is a AMD. You can see it's going flat. It needs to pop here pretty quick to stay in this upward trajectory. And Marcy, another J-hook pattern, kind of your classic fry pan bottom, J-hook pattern. If this is wave one, which looks like to be about $5, that means $30 is probably your next likely target. So when I look at who was Bob asking about wave one, wave two, three, just kind of look. There's a wave. There's a wave. Now we're heading into a new wave. Where did the new wave start? When it broke out through wave two. NetEase, a good J-hook pattern, classic setup. And notice how this J-hook pattern is starting with a kicker type signal today. Tells us there's probably a lot more upside in this one. There's that classic again, fry pan bottom, J-hook pattern. Notice what turned everything back up. It was a Morningstar signal. Then it confirmed by breaking out. So if this is 4.5 points. Look for it to probably go up into the $20.50 area. Now, will it get to those levels? Who knows? The first criteria is if you see a sell signal, you close it out. If it gets to the 20.50 area, you just become a little bit more diligent as far as watching for that sell signal, because that's probably the area where you're going to start seeing some profit taking again. And that was the reason we recommended form. Notice your inverted hammer doji bullish confirmation. Remember, that's one of our highest probability trade setups. Anytime you see an inverted hammer signal, especially in the oversold area, if they open up positive, and again, this was just from my own observations through the years, you've probably got a 95% probability or greater that you're in an uptrend. And that makes the stop loss very simple. If you take my word for it, which Sandy usually doesn't, if this is going to be a 95% probability or greater, where's the one spot after it opens positive it shouldn't be trading? Shouldn't trade back down through this level. If it does, you close it out right away. Again, that process of getting out of a bad trade quickly. And David L. pointed out LCI. This is kind of your best friend signal. There's your doji, and they gapped it up. What are all the other elements that you can analyze on this chart? They use the T-line as support. After the gap up, they gapped up going where? Into the resistance level. They went through it. So what's that tell us? That we're probably back now up into this same trajectory. Once again, if you can see a trend, then it moves sideways, it usually moves pretty fast back up to that trend. So this area right here is a good place just if you're day trading or doing some quick swing trading. These are good quick moves where they take it right back up and then go into a 45 degree off of there. And Mobley, J-hook pattern. Pretty choppy, but you can see where they couldn't close this trade, or this stock. They couldn't close it below the T-line. And a little kicker type signal, J-hook pattern. So using the signals and the patterns together just allow you to analyze that if this is my best friend, this is kind of a scoop pattern, and they're doing it off the 50, the more pieces of evidence that you can put into your analysis, the higher the probability. Again, this is all based on common sense analysis. We know there's indecision on a doji. We also know that if you're a major institution that you're going to be buying Amazon, where you're going to, and you're seeing it drift, where you're going to start buying if you're a buyer. Once you see it, it's going to act as support at the, or the 50 is going to act as support. So this all comes back to where I have a lot of people say, well, how many days does it take for you to confirm there's been a reversal? And the answer is 0. If I see a candlestick signal confirmed, that's when you can start buying. It's further conversation when the gap's up through the T-line and gaps through this area. Now you're in wave 1, wave 2, wave 3. So I don't know what this was, from 620 to 720, 100 points. That means it could go to 800 bucks. Apple, doing one of those little patterns that we should recognize, the bobble. Came up, failed at the 50, couldn't close below the T-line, did a bullish engulfing, gapped up again and did a doji right smack dab on the 50. This is what I try to convey to people time and again. This is such an easy analysis of which way they're taking it because of the simple rule of the doji. First of all, we know what our bobble pattern could turn into, a J-hook pattern. We just happen to see it with more clarity because did a sell signal at the 50, couldn't close below the T-line, and Remember our simple rule of a doji? If you just remember this simple one rule, nothing else, it's going to move in the direction of how they open it after a doji. So if they open it positive, notice they're going to trade positive. If they're trading positive, what's it tell us about the 50? It's not acting as resistance. What's it telling about our pattern, our bobble? It's telling us the J-hook pattern now is in progress. So let's see, we're going through the biggies. Tesla, same scenario. Doji, right smack dab on the 50/200. Opens positive. What it tells us about the 50 and 200? Not acting as a resistance anymore. Where's the next likely target? Well, looks like it hit the first one, this downtrending channel. Second target. Who keeps sliding my keyboard around like this? Should be right up here. So, again, these are simple rules or simple visual analysis that puts you in the right place at the right time and allows you, if you're an option trader, to make decisions on what type of back, Jim. If this opens positive and trades positive tomorrow, I'd immediately be flipping to my 10-minute chart, because if you're that far away from the T-line and it's trading up here, good possibility that's where the profit taking will step in. Oh, I hate when that happens, especially on a summer night, freezing up. Momo, another strong chart. This one you can still be buying on positive trading. The gap up, the doji sandwich type setup, positive trading tells you the profit taking from day is over. Still more upside. That was Momo. And HBM. This one's also got kind of this wedge, but we're getting right here near the breakout area. So when they start gapping up toward a resistance level, remember, just logic says if they're gapping up, knowing there's a resistance level there, they're probably not going to be too concerned about the resistance level anymore. When they gap up through a resistance level, you can kind of draw a trend right down through the tops, and they gap through. What's that tell you about your wave count? Wave 1, wave 2, wave 3 is in progress. What did I just do? EBIX. Beat. Another one that's right back up here to the breakout level. If it breaks out through this level, where do you think it's going to? Somewhere up in this range. Question is, do you think trends are more short-lived as opposed to 10 years ago? Even the swing trading is too long in regards to options, but more day trading? Not necessarily. The markets still move, and the methods that the difference between 10 years ago, especially, I became a stockbroker in 1976. And I can remember days where when the Dow was still at 800, that if the Dow moved up 10 points, that was just phenomenal. We'd sit there and think, man, if 9 more days like this, the Dow could be up 100 points. Now they move 100 points in a matter of minutes. So no, the trends are, remember, the trends are still affected by human nature. So they act the same way today as they did 10, 15, 30, 40, 50, 80 years ago. This one, little gap up. Anytime you see that gap up through the T line, get ready to buy on positive trading after that. Las Vegas Sands, notice where it gapped up from the T line, closed above the 50/200, kind of just above this downtrending channel. Another one that looks like it's now got new running room, and where's the upside potential? Up here filling this gap. So that's one to look at in the casino area. And Isle of Capri, there's a nice little J-hook pattern setting up. Let's see, we did Tesla, ENBL. So immediately when I see something like this, there's my wave one. There's my consolidation. And what started this uptrend? Kind of a bullish harami. Now they did a little doji gap up. If this moved from 8 to 16, 8 points, look for this to move from here to 22. Play, where did this gap up? Through the resistance level. Tells me wave one, wave two, and notice how they're starting wave three with a best friend, gap up, another gap up through resistance. If this is moved from the 37 area to the 48 area, 11 points from here takes you up into the about the 58 area. Oh, so WDC too early. All right, this is what you will learn at the lake, Paul, is what was the sell signal here. The Stochastic's coming up. You had a gap up through the T line. You're heading for the resistance level. Just have to wait until you see a confirmed sell signal. Let's see. I will go at least coming back up into this area, giving you a 30, 40, 50% upside potential. Okay, so I guess that's about all we got for tonight. Gold's working well. Crude oil, I'm expecting will be supporting right here off the 200. And again, this is the common occurrence. Notice when they brought it up, they failed at the 200. Had the T-line crunch went through. So anytime you go through a resistance level, what's usually the first reaction? They come back and test it to see if it's going to act as support, which they did. So this becomes a high probability trade that if they do a piercing signal, confirmed J-hook pattern, there's going to be more upside. So again, this is also identifying where are your stochastics on a J-hook pattern. We usually pull back and then head back up again. All right, I guess that's about all we got tonight. So are there any general questions on candlesticks? Why is USO so different? It's not really. You're in this downtrending channel. Crude oil, we're in this downtrending channel. I don't have the answer to that. Whoops. Yeah, why the 200-day moving average would be different. I'm guessing because this is the constant fund. As you can see, it's traded all the time, whereas the crude oil contracts, they flip over every 90 days, so they're probably recalculated. Let's see. Why do you use a 10-minute chart to confirm a reversal signal? On something, remember, let's see, which one was it? The further away, remember our simple rule, the further away we move from the T-line, the higher the probability it's going to come back and test it. No, we haven't gotten to VEEV yet, Jack. So if we start moving away, if we know that that is the our factor, that if this moved up here tomorrow and the T-line was right here, what do we know is happening? We've moved a fur piece away from the T-line. And if we know the probabilities are pretty strong that the further away you move from the T-line, the higher the probability it's going to come back and test it. And there's nothing, if it opens here and starts trading up here, there's nothing that's showing us on a daily chart that there's a sell signal, other than the fact that we're that far away from the T-line. So that at that point, you go to your 10-minute chart, because if your 10-minute chart still looks like it's moving up steadily, then all of a sudden there's some profit taking. That's a good place to start taking some profits. It's telling you now the sellers are starting to come in. Doesn't preclude, goes up, pulls all the way back, and then your 10-minute chart says they're buying again. You can always come back into it. What is the best silver stock? We've been sitting in CDE for a while. Ever since that little pattern right here, your best friend signal, breaking this downtrending channel. And what's our scenario at this point? We just stay long until we see a sell signal and a close back below the T-line. You were talking about inverted hammers. How often do they come along statistically? Out of the 12 major signals, I would say the inverted hammer is probably the least frequent. But it's also got probably the highest percent probability that when it moves positive that you now have a strong reversal. So it is the less frequent of the 12 major signals. Now, I still include it in the 12 major signals because it occurs often enough that when you see it, you probably want to take advantage of it. Now, remember, out of the other 50 or 60 signals out there, the reason we don't even pay attention to those is because they don't occur often enough to use up your mental time and energy trying to memorize those. So what I tell people, and I do it myself, every few months I'll go back through the books and go through all the signals just to refresh my memory of what they look like. I don't have to remember the explanation of them or what they do. I just have to visually recognize them so that if I do see one of those signals, I may not remember what it is, or I may not even remember the name of it, but I know it's one of the signals. Go back and investigate it a little bit more. I lost the sound for a while. Okay. VEEV. VEEV is still coming out of that fry pan bottom. Even though it backed off today, again, there's wave one, there's wave two, and notice how it broke out with a gap up through this resistance level. I would just stay long as it stays above the T-line. Did Amber show a bearish candle to worry about? No. And why wouldn't we be so concerned about it? Number one, we can see what the pattern is. There's our bullish engulfing signal, kind of a double bottom. There's wave one, there's wave two, potentially wave three. And most importantly, where's our stochastics? they're not anywhere near the overbought condition. Now, if this had occurred when stochastics look like this, such as that one right there, yes, now that becomes more credible. And that's the exact, Charlie's writing down that he writes down and then goes back and reviews why those were mentioned. That's how I came up with the 12 major signals. Because when I first started doing candlesticks, there was nobody around doing candlesticks. I just came across it by accident. And so I spent hours studying charts. I would study all the signals, all 50 or 60 of them, memorize them, try to get them in my head. And then I thought, all right, well, if these signals work correctly at the tops and the bottoms, let me start going through the tops and the bottoms and see what signals I can identify. So as I kept going through, I started recognizing the hammer, the bullish engulfing, the dark cloud, and those came up the most. And then there were some signals. As a matter of fact, I used examples in the first book when I was doing the book for Wiley and Sons, that I would look through for some of those examples of those signals, and there were some that I couldn't even find. I don't even know how I got them all, but I mean, I would hunt for days looking for some of the signals. So I finally came up with the conclusion that if I had to hunt that hard to find one of the signals, then apparently it doesn't occur often enough to even worry about. So now I forgot why I started this long dissertation. Oh, so Charlie was saying, so that's how I learned the signals and discovered that as I kept looking through the charts, I kept coming across the same ones over and over, which are the 12 major signals. And then what I discovered is I didn't have to learn all of them. I didn't have to learn the psychology. If I just learned the psychology of those 12, which was a lot easier than trying to learn the psychology that you created 50 or 60, just knowing the psychology of what reversed that market and visually recognizing where it was happening, that gave me much greater insight as to what was going on in investor sentiment and why that reversal was happening. How do you determine the trigger for the inverse J-hook and RTB? Oh, I'm trying to figure out what RTB pattern means. The reverse trigger is just, it's just visually recognizing wave 1, wave 2, bearish J-hook pattern when it kind of breaks down through the bottom of this. Oh, the rounding top, the dumpling top, just like you would on a fry pan bottom. About one. Where does a fry pan bottom usually break out? At where it started. Where does a dumpling top usually break down? Back over here where it just started. Okay, whoops, I kept this way over time again. Where do you find the formulas for the TC1000 on the different candlestick patterns? If you go to our website, the major website, www.candlestickforum.com, and go to the left-hand column, there should be a TC net formulas, and you just click on that, and there's all the formulas for you. Did the indexes have Inverted hammer. No. Remember, this is why you want to know your description of the signals. Remember, an inverted hammer at the top is called a shooting star. But what's the criteria for the shooting star? The tail needs to be 2 times greater than the body. And as you can see, that didn't happen here. Didn't happen here. So these are just the little subtleties. That's why when you go through the 12 major signals, either in the best place, I guess, to get all that information is in the second book, High Profit Candlestick Patterns. We concentrate on the 12 major signals and the patterns. But if you read about the shooting star, it's going to give you the criteria, which is maybe 3 steps or 3 pieces of information to make the criteria correct. So one of them, like the piercing signal, a lot of people get confused on that because this has to open below the previous day's trading, not just the body, the trading. So there's a lot of times where the tail comes down here and then they open it positive and take it back up. That's not a reversal signal. If it was, after 400 years, the Japanese rice traders would have identified for us and told us what the results would be. Okay, I guess with that, Jim, go ahead and do the double line. Try to keep your request to 2 or less, just so we can give everybody an opportunity. REN, big breakout. Again, this is where, if you're aggressive, observe the obvious. Something's happened here with that breakout. And if you were watching this one, which you probably wouldn't have been, I'm guessing over here, the volume wasn't very big. But this is kind of observe the obvious. This was your resistance level. It broke through that one. LCI, David L. pointed out, kind of the same scenario. Where's the next likely target? At least up here to the 200-day moving average. Sam, we did all those. AMBA, I would still be a buyer of on positive trading tomorrow. That's not a shooting star, because look where the stochastics are. Remember, a signal is not a signal unless it's occurring in the right conditions of the market. Goog, stay long on this one. Not much of a trader. I've never really traded Google because unless it's really got a strong chart pattern. This one right now, it's not real great. But Amazon, I'd be more apt to be after because of the strong reversal and the gap out or gap up through the resistance level. That one's got a much more defined trend that you can analyze. Anytime you get into a situation where you're in the overbought area and you start seeing the exuberance, get ready to start taking some profits. Nova, just stay long. This is kind of a little J-hook pattern in progress. And Vuzi. Nothing to get real excited about on this one. At best, you're in a very slow uptrend. Now, you can be buying this one if you like on positive trading because of the Morningstar signal. Just doesn't have a great a chart that's telling you there's anything dramatic going on. GNRT, General 8 Maritime. Kind of the same scenario. You can be buying this one on positive trading. You had the little inverted hammer, more of a harami though. Doji right on the T-line. If it opens positive, you can be buying it. Just use the T-line as your stop after that. ESPM. Yeah, ESPM. Nothing here. You're in the wedge sideways. That'd be someplace else. AVG. Is that is that a buyout of some sort? I don't know what to tell you there. I'd be probably taking profits for that big a jump. AVXL, you did a doji, a long-legged doji, and again, this is part of that criteria of you start watching for profit taking up here, because look how far away you are from the T-line. So this is one of those where I would have gone to my 10-minute chart. Even on the 10-minute chart, once I saw it wasn't getting back up above the T-line, I probably would have taken some profits up here, because if it was drifting back, what's the worst case scenario? I can always be buying it on positive trading tomorrow. ENR, the Energizer. Not a real exciting chart, but you know you're in a steady uptrend. You can stay with this as long as it stays above the T-line. TAL, another one that you can stay long. You've now gotten up toward the overbought area. Just watch to see what it does at this first resistance level. That means you'll probably be in the overbought area as it hits that level. ACHN, you can see the wave. You can see where they've gapped it up. I would suspect up here around the 11 area is your next target. To you, look for a 45 degree. Anytime you see that big breakout, it's gotten back into the trajectory at a 45 degree. VRX, oops, starting back up. Still not anything that I'd get real excited about just yet. Not anything showing a lot of strength there. STX, did that bounce up after hours today? If it did, well, I think, let's see, one of them popped pretty strong, and maybe STX was, but if this starts trading above this level, you want to be buying it. Notice your big belt or belt hold piercing signal. Remember, a belt hold with it opening much lower and coming back up can be just a belt hold. It can be a belt hold piercing signal. It can be a belt hold bullish engulfing signal. But the fact that they opened it that much lower and came back up said they wiped out a lot of the sellers. JetBlue still looks like it's going to the 50. Just watch to see what it does once it gets there, see if it's going to act as resistance. Boeing, I probably wouldn't be trading. As you can see, there's nothing real dynamic about this chart. And you're stuck here. I would, if you're long, you can stay long if you like it. Just be cognizant of that resistance level. And Lockheed, now that one's more compelling. There's your wave one, wave two, your belt hold signal, bullish confirmation, breaking this level by gapping up. You stay long on this until you see a sell signal. And CRNT, J-hook pattern in progress. Just make sure your volume is pretty hefty on these smaller price stocks. Uh-oh. Nice J-hook on that one. That one's going to get a little star next to it. Exactly. I think we recommended this a few days ago and it didn't confirm. Now it's getting ready to confirm. That one may have another recommendation tomorrow. Nike, you can stay long on this one. You can see how it's broken the downtrending channel and the 50 with a doji sandwich breakout. So very simple. You see a doji right on a resistance level. If it opens positive, you want to be buying immediately because everybody and their brother is watching that resistance level and they're going to start jumping in. You want to be in first. Disney sitting right on the 50. Make this a little bit bigger. If it opens positive, telling you the 50 is not acting as resistance, at least you can figure this is your next target just along the tops. HMNY. We recommended this one today. If it had started trading positive, I'd still be buying this one on positive trading tomorrow. Spirit Airlines, you can be buying this one. It did get through the resistance level. Yeah, it's not a real exciting one either, but it's moving in the right direction. SRPT, having a hard time getting through this level with a bearish Harami in the overbought condition. If it opens lower tomorrow, I'd close it out. Then I'd just be more apt to buy it if it came up through the 200. Micron, starting back up ever since your Morningstar signal. Still junky in here. If you're long, you stay long. If you're looking to buy it, I'd still wait for it to get up through the 200. AUY, acting well, one of the golds. FMSA, didn't confirm today. Now, if you did buy it on positive trading today, just use a simple rule. You stay with it as long as it doesn't close below the T line. I'd still be a buyer if this came up through today's high in tomorrow's trading. Verizon, not an exciting stock, but you can see that you're potentially setting up for a J-hook. If you like Verizon, you can be buying on positive trading. CRNT broke out. We did that one, right? Berks Group, nothing that I could get my hands on there. It's probably at least coming back to test the T-line. So once it started failing here, after it should have been trading higher, I would have closed it out because it's telling you they aren't taking it up anymore. Let's see. This was TERP. Big move, breakout, 45 degree. Just stay long. Mankind. Nothing real exciting here either. No great trajectory. Still looks like a big wedge type formation. I'd be someplace else. Whiting still hasn't been able to get started. Definitely would be looking for a buy signal, though. As you can see, you're in the oversold area. And DWTI, the inverse crude. You can see the fry pan bottom. Just got to be aware that crude on the August contract is sitting right here on the 200. So that's kind of what you have to watch. Hawaiian Air, stay long on this kind of little scoop pattern. We did CLF. If this trades up pretty strong tomorrow, use your 10-minute chart. UVXL, if you're long and you didn't close it out today, if it opens lower tomorrow and starts trading down, take your profits. That's a long-legged doji at the overbought condition. Cena, get ready to buy this one, especially if it gets up through the $55 area, breaking out into new territory. Remember, you had a big bullish engulfing signal. You didn't have a signal down here that confirmed. You had your doji gap up. If it had opened positive, you were all right. Took it back down. No signal. But then notice what happened here. This is your signal. Kind of a stutter step. Now you remain long. Scotty, nothing real exciting here either. As far as your trajectory is concerned, you can see that it's not going anywhere in a hurry. If you're long, you can stay long. I wouldn't be buying it, though. EXK we're just staying long on this one. But also watching how far away it is getting from the T-line. But notice how your fry pan bottom had the little dimple right here. So you can kind of calculate from here to here. is going to be the same as from here to here, and that's just about where it broke out. So these are the type of things that if you know this is the dimple, this is your halfway point, that even though you're in the overbought condition and you have an up day going into resistance, you could be buying right in here. Because what's going to happen? Either it's going to break out big, or if it fails, you get right back out with a very, very small loss. SGY, same thing. Big fry pan bottom. Where's the next likely target? Well, if you don't move too far too fast, this is where you kind of watch to see where the profit taking starts. And if the profit taking started after this big fry pan bottom, what type of chart do you think would be setting up? Probably the J-hook pattern. So you take your profit and then wait for the J-hook pattern to start setting up. Juno. Yeah, stay short. You can see where they did get through kind of this support level. I would suspect at least coming back down and testing the lows. Milam, nothing exciting here. You know you're in a big downtrend. You know you've got a resistance level of the 200 and this downtrending channel. If you're long, just watch to see what happens once it gets up in this area to see if they can get through. Let's see, LGIH. All you can do is stay long on the steady eddy. Tazar gapped up, now doing a doji. This is where you put a stop where you think logically they shouldn't be trading. So if they did a shooting star, if they opened it lower, I'd probably have a sell stop at, what is today? Monday. Friday's close. If it came down through there, I've got something that's telling me they're starting to head back toward the T-line, that they're confirming the sell signal. ADK, nothing. I'd be someplace else. And NN or SSNC. You can see kind of the little bobble. Notice where it opened, right smack dab on the T-line and came back up. If you're long, you stay long. If it opens positive, it needs to do a doji sandwich like this that would take you up above this downtrending channel. That would be your breakout. BMRN. Another one that's probably going to do a little bobble here. Notice where it ran into trouble at the 200, right at the same level it ran into trouble before. Raytheon, stay long. Not an exciting mover, but it's as long as you're above the T-line, you stay with it. EWJ, the Japanese fund. Boy, if you like it, you stay long, but you can see where you are as far as the resistance level. If it doesn't get up through here, you're still in this sideways trajectory. Let's see, this Barracks, one of the gold stocks, needs to open positive to stay in it. If it opens lower, take your profits. You can always buy it back if it comes up above the T-line. EXK, we're watching to see if they open this up too strong tomorrow. Ocular, got the slow curve. You can buy this one as long as if I was buying this one tomorrow, I'd have to come up today or up through today's open with the expectation that the first target is going to be up here. If it breaks that, then you've got a lot of room up here to fill the gap. 2-0 right now. The oils are just dead in the water. STX up to 27. All right. The belt hold. This one, as you can see, yeah, this one would have gotten away from you, but you can see where it broke out, obviously right here at the resistance level. JM, that's up to you on how fast you want to trade. I've just used the 10-minute chart because I'm a swing trader. It's worked very efficiently for me over the years. If you want a little bit more confirmation, the 15-minute chart, use that. Labu, still in a slow, steady uptrend. I'm pretty sure that if this has got a trend channel in progress, so I'd suspect it's heading up to this level, which means the biotechs will be moving up. Philip Morris, just stay long, not an exciting mover, but in a steady uptrend. Oh, ADSK. Another one that you're in the right direction. It's running into a little problem here at the 200. It's probably running or heading up here to the 50 area. So if you're like it, if it opened lower tomorrow, I'd probably expect it to come back down and test the T-line before coming up through the 200. Just not a great looking chart right now. Now, a lot of them have done that move where they came back up pretty strong, like we saw in Cuervo and Western Digital, kind of a double bottom off the 50. So notice where the bullish harami occurred, right smack dab on the 50. This is not unusual to see that. And I say not unusual. This is exactly the advantage we have as candlestick investors, that if the institutions were selling and the next day they were buying, we can see immediately what's happening to investor sentiment and be ready to be buying on the next positive day. The biotechs still moving up steadily. Okay, with that, I would expect we're going to see maybe another day or two to the upside, because if wave 1 and wave 3 are equivalent, especially if they move it up real fast tomorrow, then I'd start looking to take some profits. All right, with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow.